You're on mute, I guess.
Yeah.
Yeah, that's our famous dialogue for the year. From
Right.
our side, of course, Thompson is joined. We have Sudhir Shetty from AdFactor. Harish is just going to join. And I think that's it. And Mrinal is also going to join. But we can start our discussion. It doesn't really matter. They'll.
Right. Right. Do you guys have something you would like to present before we start we have a few set of questions for the team in general. So I think we can wait for everyone to join, but we'd like to hear from you first.
Yeah. So what we'll do is, anyway, our formal investor pack is getting ready, and that's why we have Sudhir Shetty there. So very shortly, you will see our formal deck available, and we will make it available for all you guys. But meanwhile, what I'll do is maybe spend 2-3 minutes on trying to set the context in terms of this new 3i, right? So see, post the carve out, if you look at it now, the new 3i is after the carve out of the products business. Now we are in cusp of change. The way I look at it, it's a great opportunity for this company to kind of chalk out a new course. That's the way we are. And at a start point, the new 3i, we are probably redefining this 3i itself. 3i has been this ICICI for a very long time. Almost 27 years. The 3i stand for ICICI. So the new 3i, we are defining it as Innovate, Incubate, and Invent. So that's the mantra in which we are going forward very clearly as an organization, right? So just to expand on this strategy, Innovate is also, we are now building our new vision mission statement as well. The vision also is that we want to be a one-stop shop and an end-to-end service provider. The biggest shift we are trying to do is more aligned towards business outcomes and aligning to our customers' KPIs and business metrics, where digital and technology is part of it, actually. So that's a huge shift, if you ask me. So as a new 3i, we want to bring in a convergence of technology, domain expertise, and industry orientation. So that's a key shift from a classic IT services company, which is traditionally, you have a time and dozen. Even I work for a few of them as well. So we're trying to kind of do it very differently. That's one. So innovation is about how quickly can we orchestrate, customer-oriented, industry-oriented services and solutions very quickly, and we monetize and add value to our customers. That is Innovate very quickly. Incubate is more or so, if you ask me, is accelerate, but we are using the word incubate just to keep it, the 3 I's, where we want to work with venture capitalists who are already invested in startups. We don't want to waste our money on startups. Let's be very clear about it, okay? There are guys who already invested their money in startups, okay? They have an ecosystem. Our role is very clearly to provide enterprise-grade architecture, enterprise-grade standards, help them to scale up or commercialize. And we also build center of excellences around them, actually, right? Around them. And we give them global access. So our investments would be in practice building, industry orientation, making them enterprise grade. The most important thing is giving them global access to customers. That's our role. We are very clear, actually. Now, after some time, it's a mutual win-win for both parties, where we have created revenue value for both of us. We might decide to take stakes in it. We'll have a first right in those companies where we are doing a white labeling. And the invent and the incubate work together because they are in various stages of, a maturity. Our focus areas would be in future-ready softwares and technology, Siddharth. We are very clearly focused on few areas. We don't want to go boil the ocean. We want to be a super specialized organization. We want to focus on 5G-powered services. Anything to do with 5G. 5G-powered cognitive services is a very clear focused area. We are bringing in best in class. In fact, our press release will come out of the new team we are bringing on board as well. Real top-notch professionals are brought in to build these practices. And so the 5G and the telecom media entertainment will go together because it's a kind of a convergence. And one is build the telecom media entertainment vertical itself, the next generation one, where we are looking at SD-WAN, all this good stuff in terms of SASE and edge computing, work with the telcos as partners and also work with telcos customers also. Because see, telcos are struggling. Globally, all these guys have been selling. I've been a telco guy myself. I don't think people have really thought through it beyond postpaid and prepaid. I think the only good thing is Jio's kind of set the stage, at least from an Indian context perspective. Maybe we want to work with other telcos to bring the ecosystem to them, bring more service lines, take them to market. A very clear focus area. So going beyond BFSI, we want to kind of build on the BFSI experience we have, right? And kind of expand, invest in telecom, media, entertainment, using the technology incubation we are talking about, and build other services and products around it. That's a very clear strategy. Second, we also want to focus on, we also got a head start in our cloud practice, right? The way we are kind of building our cloud. But now as a kind of a late start, we want to kind of see how to make our clouds edge ready, which is future ready. Everybody's got a cloud today, so how can we be different? We want to be an edge ready. All our cloud will be edge ready. And we're also working with some very niche technologies by which we can reduce the cost of cloud by almost like 20%. So we're working on that as well. So cloud, which is more optimized in terms of virtualization, and edge ready. And once it's edge ready, it's also SASE, secure at the edge. You look at today, the single biggest problem is security. You work from home, all of us are working from home. It's fantastic, it's all flat, but also increases the security factor of it actually. So how do you secure at the edge of the network will be a clear focus area. So cloud, which is edge ready, then also building on our typical infrastructure management services practices where we want to invest in micro data centers, because that's the way forward, where we want to work on micro data centers. So if you look at it, we are joining the dots, Siddharth. You got the cloud, which is edge ready. We got the micro data centers, take it to the edge, right? So we also invest in edge computing, the 5G powered services around it, right? And then the cognitive services where we want to take analytics to the edge. So this is my invent or the future building stuff. If I break it into three parts: run, grow, build. Run, we run our current business, which we inherited more efficiently. Grow, we aggressively grow with innovation, very smart solutions and services. Build is we build for the future. We want to be future ready because that is going to keep us probably stay ahead of the curve. That's very clearly. On the engagement and commercial model, Siddharth, we want to be a disruptor. Fundamentally, what we want to do exactly opposite of competition. Exactly opposition. So we want to do absolutely TCO-based deals, which are going to be disruption, using digital and technology. Because see, look at it this way. Most of the top-notch players also, it's not that they're not aware of whatever I'm talking about. Everybody's aware of that. It's a question of, do I go cannibalize my revenue or not? And when do I cannibalize my revenue? Or you allow somebody else to come and cannibalize the revenue? From where we are, starting as new 3i, I've got nothing to lose. I'll just go cannibalize other people's revenue. I'm very clear on that, actually. Right? So that's where we are. So broadly, see, that's the kind of direction where we are moving, and that's where we want to invest our time and energy also. So kind of how do we more efficiently run our current run business, get some more margin extraction out of it, make it more profitable. And the single biggest thing is whatever we preach, we want to practice, right? Yeah. So that's the kind of broad, if you ask me, then you can ask me some questions and maybe I can take it, from there.
Right. Okay. Thank you, Mr. Thompson. That was quite an introduction, and very frankly, it is what's got us excited about 3i. Like that was, we had the opportunity to see your press release and your roadmap. But as you mentioned yourself, right? Like it's what you're talking about is something that your competition already knows and is also pursuing. It's not that no one else isn't pursuing the exactly same things. So some of our questions are going to just revolve around those particular areas. But first, I would get to something that the first thing I wanted to ask you was the deal with the Apex partners. Did that include a non-compete? Like, does this prevent the new 3i from actually entering the products business again? Like based or like designing similar this thing, or is the new 3i strictly going to function only as a services only company?
No. See, like any, Siddharth, look at it. Any carve-out business, it's logical that what I sell to a party, obviously I can't produce the same thing as that, right? So the non-compete is limited to that.
Okay.
Non-compete, of course, non-compete is there because obviously we cannot produce the same product which we sold, right? Absolutely. Right. And but beyond that, we are going to build products. Very clearly, I told you that's the reason why we are investing in telecom, media, entertainment, and we are building Center of Innovation, Center of Excellences, and the entire incubator strategies around that. where we take existing products, we build other products on top of it or services on top of it. But fundamentally, we will build IP. So that's simple, as simple as that. So we are not going to be just a services company. Let's see. See, everything is going to be digital inside. It's going to be technology inside. It's going to be products.
Right.
Ultimately, how our clients consume could be as services.
Right.
The world is anyway moving towards anything as a service, right? So your point, the focus would be on IP generation very clearly.
Okay. So from what I understand, and from what I can infer, because the carved out business generally dealt with the BFSI and the insurance sector, so your products largely won't be catering to those, but you'll be working on these newer areas that you mentioned.
Yeah. So to your point very clearly, so to avoid all these conflicts and other stuff, we will stay away from building products in BFSI. Okay.
Right.
Definitely, we will see services are bread and butter. Okay. In BFSI, we will continue to do services. We will have collaborations. We will have alliances and stuff like that where we will work on it for sure.
Right.
But our new products, what we want to invest in horizontal sectors and in industries like telecom, media, entertainment. Say, for example, I'll give you an example. We are working on creating a global risk and compliance product ourselves.
Okay.
Right, which was not part of the carve-out. So it's there with the current 3i itself. In fact, we have a Swiss-based company with whom we are working together. It's co-owned by both of us. And the global risk and compliance will be a core offering by 3i. So it's a product and platform we're developing together.
Right.
And we want to invest in it. In fact, part of our roadmap, we are also negotiating with various governments across the world. We got nothing to lose. Whoever gives us the best bet, we will put up a center of innovation in that country. So as we speaking to you, we are negotiating with Malaysia, Switzerland, Republic of Ireland, Montreal. So 2 out of 4, we will put a center of innovation. And of course, India is definitely there. We are investing in India for sure anyway.
Right. Okay. So thank you, Thompson. But that brings me to page 9 of your strategic roadmap. And it talks about, just if I could particularly get to it by... Right, yeah. It talks about protecting revenues dependent on Azentio-led accounts. So, is there some sort of a tacit agreement between you and Azentio to continue having a working relationship? Like, is there a future there? Like, is that a stream of revenue that we're looking at?
No, absolutely. Absolutely. See, look at it this way. See, for example, part of the agreement itself, see, some contracts which were led by the current products or the product divisions, which is now essential, right? So if you look at it, there were some customers led by products, some customers led by service, even before the carve out. Correct.
Right.
Now, which were led by the products are now become essential led, and where we have a dependency on them, correct? Because we have services revenue, so we have a kind of a engagement agreement with that, and vice versa also is applicable because it was led by services, and they are dependent on us, so we have a kind of a intercompany agreement on that. So fundamentally, that is a very important for both parties, if you ask me. So where these agreements are not novated to them, where we work together as, in this engagement model to kind of we protect these revenues for both parties.
Correct. Right. Also, like that's actually very good to know, because that gives us at least a one steady form of revenue coming in from an existing stream that works. Right. I just have 2 quick questions about what kind of 5G services are you planning on offering? Because from we heard of the Bharti TCS tie-up, we heard of Cisco trying to get into the hardware with Vodafone. So your services be more on the software end of things, data processing, and the other one was with regard to this is something that I heard in passing, and so I'm not too sure of how it works, but I've heard 3i is working with Zscaler or Zscaler. I don't know how they pronounce the name of the company in terms of the exact same thing that you were talking about, right? Security. That's the key essence of what's happening here today. So, so they are into a product-based model where they outsource it to services. So, is it something? Are we working just as service model? This thing, is there a transfer of technology? Is there something happening there?
So, so without getting into the core of the thing, I'll answer all your questions. So, all the 3 are. Siddharth, so in fact, as you speak, we kind of had definitive agreements with various parties, various stages. Okay.
Right.
One very clearly is we are very closely working with Oracle. Okay.
Okay.
And our alliance is pretty strong because if you look at it, Oracle has been a kind of they are in a catch-up mode right now in the Oracle cloud space. They're in a catch-up mode. Right. It suits us because we have also invested in a huge Oracle shop right now from a cloud infrastructure partner perspective. Okay.
Right.
So now we are building around it. To your question, I'll come to your 5G and telecom later, but the last point when you spoke about, so where we have also developed a lot of technologies around the Oracle cloud. Say, for example, we have now built our own VDI.
Okay.
In fact,
I'm so sorry. Could you just elaborate on VDI? I'm not
familiar with the simple
virtual desktop.
Virtual desktop, like in terms of securing your work from home, as simple as that today. So bring my own device. It's a big problem for all companies. How do you secure work from home? Right. Now, if you look at Azure, it's all very expensive. So we are trying to kind of reduce the cost by 50% working with Oracle. You'll see our press release in another 2 or 3 weeks. We already have definitive agreements on that. We're releasing it. Okay. So that's a very important arrowhead the way we look at it. That's point number 1. Okay. Point number 2 is to your point on the example. We are also working on other technologies. Okay. Which provide SASE, which is secure access, secure entry, the similar stuff at the edge of the device, edge of the network. We are offering that. We are building on top of white labeled startups who have given us exclusive access to technology. Okay. I give you the example of the incubate, right? I'll not be able to name the technology, but it's a very advanced technology. We got access to those technologies, and we are building our own ecosystem and services around it. Okay. Now, I'll give you an example of this technology. This is 5G grade technology, which I can even offer it at 4G.
Okay.
So today, if I want, I can offer SASE even in our 4G network.
Right. So is this something similar to Vodafone Idea's MIMO or something that they recently launched around in September or October? Was that something similar to this?
That's a very small version of this. What we're talking is far superior ones. And in fact, we want to talk to Mr. Tucker and other people also, in terms of, offering this. But we have quickly wanted to, pilot in some of the other smaller countries like Indonesia or Malaysia, wherever 4G. So what it does also is, this is also edge ready. See, whatever they are offering is not compatible or upgradable. See, what we are offering, it's upgradable to 5G automatically. So tomorrow when 5G network comes, also no changes. It's upgradable. Second, it's edge ready. When I say edge ready, tomorrow I bring a micro data center, also it's ready automatically. So things like that is what we are kind of looking at it from a future compatibility perspective, which will be a huge differentiator. This we can offer it as a service to people. So good old telecom terminology, I go tell them, boss, offer it as a value-added service. They'll happily do it. And we can run it from the back end. Nobody will know it. It might be a Vodafone service. All you know, run by 3. That's about it.
Right. Perfect. Okay. So now that's really fascinating to know. But the next thing is actually what had us a bit concerned. From what I understand is, and I think I would ask Mr. Nirjar to come in here, because so what would be the operating profit margin of the newer firm? Because from what our understanding was, the meatier part of the business was the products business. Like it might have been lower on revenue, but had a higher profit margin. And from our basic understanding, 3i has had cost issues in the past, right? Which has been a cause in the past for why 3i has suffered. So, Mr. Nirjar, would you like to chip in?
Yeah, thanks, Siddharth. So what I was trying to point out here is that actually there are 2 questions. One is that haven't you ended up selling the more valuable part of your business and selling it at just about 2.5 or 2.3 times sales? It's not really sounds like a very attractive price. Even though, of course, the market is extremely happy with whatever has happened and stock is up 4 times the last 1 year. The second part is that, you mentioned that your EBITDA is just 40 crores on 618 crores of sales, which is on the lower side if you look at any. So is this because of legacy issues of the way the company has been structured in terms of costing? Or and can we expect some significant change out there
I will. So, Mr. Jara, 2 parts. I inherited the company March 18th. By the time I think the decision to your first question is already done. So, obviously we cannot debate about whether it's right or wrong, because it's already done. But the way I look at it, to your point, we look at it positively, because at least the new 3i, what we have inherited, is a debt-free company, right? That's the way I look at it. I look at it like a pure entrepreneur. I got a debt-free company. It's for me to kind of build this from here. That's the way I look at it, right? That's from a point number 1. Point number 2 to your question is, you answered it yourself, because if you look at it, traditionally 3i has been a product-led company. Those services was a separate kind of a business unit, or whatever it is. It was a product-led company fundamentally, and obviously, I won't call it. It's a like any product-led companies, their ability to leverage the services was not optimal. The way I look at it, right? So that's a structural issue. Now, if you look at a company like us right now, where we are, we have no choice. We have to build from where we are. So that's what, if our strategy also, Mr. Nijar, I said, whatever I have inherited, I call it run. And we are very thankful we have that, because see, you look at it this way, we are a startup who inherited the 609 crores of business. I don't have to start fresh. So this is putting food on the table for us. All we have to do is run it more efficiently. We extract more margin out of it, right? And then we want to invest in all the new things I'm talking about in parallel. So these are parallel tracks which are running. So run my current thing more efficiently, get more margin out of it, grow very aggressively in these new lines of business, build for the future. And all these 3 will converge tomorrow. So if you look at it, our vision also, the medium term is 3 years, we want to be a 1,000 crore, 100 crore company. Simple. That's our mission we are running, and we are getting into the cascade right now. We are working backwards to get there. And the revenue mix will change. See, what I'm also telling, in fact, I want to probably, when an investor meet, boss, this is going to be a new company. Investors are also thinking it's a continuum. No, none of us are in a continuum. It's a reboot. We are rebooting again. This is a new company. It's no continuum.
Right. But given, your cost structure, whatever you're doing, it's actually a very, very competitive field. We know how many companies exist across the world on IT, and they're all trying to do something, whether it's cloud or it's banking, and it's the same words which come across whenever you meet anybody, right? It's just that some are more successful while executing, and some are less so. And given your legacy issues of costing, how do you sort of plan out being ahead of the curve in terms of being able to get the new client, or sort of scale up the client, or if you could talk about billing rates, or anything which comes to your mind, which helps me understand from a financial angle?
Yeah, see, that's what I'm saying. Now, see, again, you're asking me a question to a person who's in a continuum. For me, I'm a new guy. Look at it. So you're asking me, my brain already thinks in 3 boxes. Okay. Box number 1, what I got, I am ruthlessly focused on making it efficient. Okay. I will get you more percentage on the margins, right? And I'm not going to do a big PhD about the current business, to be very honest, right? I'm just going to keep it more better. Grow is very, very get into mining of it, clear revenue mix change. We're not going to touch any business less than 40% gross margin. Let's be very clear about it. As a simple start point. Nobody's getting even approval for that. So the grow we'll focus 80% on new lines of business we're talking about. Nothing to do with the old lines of business. I'll give you a small example, okay? We are doing testing business or ADMS business, all good old business we've all been doing for 25 years now. Now, none of that we will do in the grow. It is all digital testing. It is all AI powered testing. What I do with 100 people, I do with 30 people. You do the math yourself. Same coding, ADMS, my teams are sitting there and doing ADMS for donkeys years, they were all doing. Okay. Today, the same thing I will do with non-engineer, no code, low code developers. 50% of the cost. IMS teams, I have 1,500 people. I have an infrastructure management services. Okay. Knock, SOC, we all been doing. Every company does that. The new one we are talking about is all AI-led, bot-led stuff. L1 is totally automated. L2 is also half automated. Humans are only L3. So it's human-humanoid coexistence. So what I used to do with 1,500, I'll do with 500 people. You do the math.
Absolutely.
It's cannibalization. See, very simple. World has changed. It's like the old ways. Who draws first?
And your assessment of the skill set within the firm in terms of reskilling needed in case you're reducing
I'm not wasting my time. I'm not wasting my time at all. Let's be very clear. That's the run. The best of the lot come to grow. The grow is all lateral hires. We are headhunting from the market very clearly.
Right. So you don't see any redundancy issues once you're sort of reducing costs across verticals, like you mentioned, the testing.
That is where the second problem. See, for example, our new value is going to be, we are going to be a very people-centric company. Okay. Right. And we're going to be kind of, so our new values are around empathy and leadership. The point is that these are separate buckets. We want different skill sets. We'll get opportunities for people to move from here. Of course, we will invest in reskilling and upskilling them, right? To help them move into the other boxes. We will do that. But to your point, these are like three separate companies within 3i.
Absolutely.
That's the way you want to run it.
No, I appreciate your answer. Thank you.
Right. Mr. Thompson, thank you so much. Like, that was actually very informative to get that from you. But it brings me to a very interesting point. There was recently a press release mentioning that your 3i is looking to hire about 1,000 people this year, right? And you've spoken about how you're aggressively chasing growth, which is very well appreciated. But what are the company's debt-related plans? Because from my understanding, again, I think there would be a certain amount of capex that would be required to head into certain new verticals. Particularly, there might be scenarios where for a first couple of years, a new product or new service might not generate as much revenue. And and given that the target is a $1 billion revenue by 2030, which is an extremely ambitious target, what would be the debt planning that the company is planning? Is there any sort of I don't know, debt forms that will be raised, or would it be internal accruals? How would it work?
See, the year one, Siddharth, we want to keep it very simple year one. We don't want to complex ourselves. And see, we just got out of this carve out. We want to get our basics right. So it's a year of foundational building. We want to be very frugal, right? We just want to kind of test all these parallel tracks very frugally. Maybe 4 of it will take off and fail fast. 90 days is what I give to people. You start a new one, cut losses, move on. Then we scale. So it's very clear. So for example, we will place these bets in all these we are talking about. 5 might succeed, 2 might fail. It's okay. But then once the 5 succeeds, they start generating new revenues, we will invest. So year one, to your point, we are going to be very frugal. We are going to be within our means. This year is a year of resetting, rebuilding, reinforcing, and getting our things right. Of course, end of this year, we will have to raise capital. Of course, we will. We will raise capital. Not this year. This year, we want to be super focused on, it's like a startup, right? We want to kind of get our basics right, get our process right, get our fundamentals right. So we don't want to run before we can walk, actually. Let's be very clear about it, actually.
Right. Okay. So you mentioned raising capital. Would this be like, is the plan to raise equity, or is it through pure debt? Because we'll get to the SOA later. I mean, that's not something I wanted to talk about first.
To be very honest, I think at this point of time, our life is very small, Siddharth. So though we have, I'll tell you, my focus is though we have a long-term vision, we have medium term. Right now, we are super focused on Q2, Q3.
Right.
What is approved for certain initial investments from our own small means. We want to get off the box, actually, to be very honest. Maybe I'd love to answer your question, Q3, Q4, you talk to me, I'll tell you exactly the answers what you're asking me.
Okay, I'll make sure I'll get back to you then as well.
Yeah.
And I have one more question before I move on to the SOA part of my questions. So right now, and I think ever since ICICI exited from the company, I think around 2012, there hasn't particularly been a promoter or a control over the company in that sense, and which one some may argue is a good thing, some may argue it's against. So are there like any talks of any group possibly coming in? Is the management actually in favor of someone stepping in as a promoter group or having a leading stake? And I mean, how do you envisage it going forward? I know you just spoke about focusing on Q2, Q3, but that's something that
maybe again it's a slightly a Q3 question the way I look at it. But anyway, I'll talk about it. See, ideally, right now the thinking is that we are also kind of bringing other more diverse board members to guide the organization. So right now we are looking at, and we are also bringing a lot of lateral hires, senior folks to join us. So it is more like a professionally run organization. In fact, we want to even make a announcement to SEBI that formally that we are a professionally run company. We don't have a promoter. We are even talking about that at the point of time. So it's very clear to our investors also, right? That's point number one.
Right.
The second one is, of course, look at it. For a healthy company, the right promoter can add huge, value to it. It again depends on, at what point of time, at what stage, or maybe I think again it's a Q3 question the way I look at it, right? But right now I think this Q2 and Q3 we want to stay focused, get the base right, okay, so that at least we'll be able to accelerate fast. Because at the end of the day, to what Mr. Gupta asked me, ultimately numbers speak, right? So we get our basics right, get our rhythm right, get our sales rhythm, get our business rhythm. So our focus is more there right now, Siddharth, if you ask me personally.
No, I completely agree. And like my concern kind of stemmed from the exact same thing that you mentioned, that you're going for lateral hires, you're getting independent board members, which is excellent for the running of the company. But it also makes you, because all of these require, shareholder approval, etc. So, I mean, in case there isn't a very strong promoter group or it's a very diverse one, that leaves you open to a lot of issues with the shareholders or a possible negotiation over who should come in, who shouldn't. Right? That's why the question from my end. But now I have a few questions which are related to the scheme of arrangement. So the first one was with regard to, first one I'm pretty sure of the answer, but I just wanted to get it very clear. What would be your outstanding debt or liabilities post this? From my understanding, you'll be finishing off the SOA, clearing off the FCCBs, and then you would be a debt-free company. Is that correct? Right? There will be no liabilities on your books.
Mrinal is there. Mrinal, you want to expand on that question?
With this statement, we will be paying off the loans. We will be paying off the preference shares also, which is at NPV. And we will also be paying off the FCCB. FCCB payment is now subject to regulatory approval.
Right.
We have already taken it up with RBI and the application has gone through the authorized agent. There will be a small debt in US, which is the current account now. To around roughly 2 million, which is an operational debt in US. It's a working capital limit, basically. That's it. No other countries or anywhere across we will have any debt or loan liability.
And from my understanding, the FCCB, you've received permission already. I mean, I think it was part of the NCLT order that you've received approval from Singapore as well for clearing of the FCCBs, right?
No, there is no NCLT order here. This deal was not done through the NCLT route. This was a direct deal which we did through the shareholder approval route. So now to repay the NCLT, because the NCLT is being paid before its natural due date, we need to apply to RBI and get it cleared. So our expense ratios are well under control because RBI doesn't want it to go beyond 4.5%. So we don't have that problem. But the authorized dealer says that since there is a change in tenure, it's a change in the original terms. So we need to route it through RBI.
Right. Okay, I got that. The other question was, so from my understanding, again, you have roughly about 2,000 600 crores of accumulated losses on your books, and which is why the SOA was brought in the first place.
Yes.
And post the SOA, you will still have net negative reserves of 626
the
crores.
reserves will continue to stay negative.
Right. So what's the plan on, I mean, I know setting it off. Is there any sort of tax planning that's been envisaged for this, or?
There are two parts. I'll break this into two parts. One is the tax planning. The tax planning is very well planned in this organization, because if you look at the historic losses that I carry forward, I have sufficient losses which can, for which in India, I don't need to pay tax for some time. Okay, because that is loss as per the income tax calculations.
Okay.
Because and most of it is in depreciation, so that is a carry forward which I can have, which I don't have a 8-year restriction at all on that.
Okay.
And so there we are well planned and well positioned over there. So even the deal tax impacts on the slum sale get absorbed over here and get knocked off, because I can use the depreciation part to knock that off. So that's now coming back to the books of accounts. It's going to be a journey for me to knock off the negative retained earning, but we have a capital reduction scheme which we have announced. So that will set it off by a huge amount, but it will still be negative. So we'll have to build up our profits, or maybe certain sales which can then get in profits. But it continues to be negative.
Okay. So just to focus on the first part of your answer, when you say you'll be carry forwarding your losses, I'm slightly on the weaker end of the theory here, so please correct me if I'm wrong. If you when you're shifting to the newer tax model, the lower tax model, which was announced in 2019, would you still be able to carry forward these losses?
Yes. If you look at the way the finance ministry has restricted carry forward over there, they have restricted certain items which are basically special depreciation rates and certain benefits which you had under an old section 10. Those were not carried forward. However, our losses, if you look at the history of the company, we never had special depreciation, nor did we have any benefits which we took under section 10.
Right.
So the carry forward happens, and it can continue in the normal course. Whether even if I shift to the new regime or I don't shift, because there is no sunset clause in that stuff.
Okay. So my next question, obviously it's a very cliched one. I'm pretty sure everyone's been asking you, but when can we expect the SOA process to be completed with? Because, I know there have been regular updates, but there hasn't been any announcement with regard to when roughly the record date for the same would come in, and by when would the entire delisting, relisting, etc. go through.
So see, this is a deal which has happened. There is a journey which has to be traversed. So that is going on. I can't give you an exact date, but our endeavor is to close it as fast as possible.
Right.
And get away with it. But there are certain regulatory matters and other matters which our partners have to sort out. So that is underway.
Right. Could you elaborate on the possible issues that are cropping up in the SOA?
They have the deal in Thailand and Saudi Arabia are yet to close, because they are currently getting certain licenses for business licenses to start operating there. So as soon as they get the business licenses, the deal can get closed.
No, I think his question is the SOA, I guess. No.
On the SOS, not
SOA,
the
not on the deal.
No, sorry, I didn't interpret the SOA. Could you just elaborate?
The scheme of
scheme of arrangement, the reduction of capital.
See that we have got the NCLT written orders, and now we will put it up in a board meeting and we can close it. I mean, our endeavor is to close it as quickly as possible, because it was stuck because we could not get the signed copies and stuff like that, certain regulatory papers. Now we have obtained it, and we should be in a position to close it quickly.
Right. So would it be optimistic for me to assume that in the next, by the end of this quarter, that we would have at least a record date or something?
Our internal timelines, we want to close it by this quarter.
Right.
Yeah.
Right. So by this,
we have other regulatory issues, but we are now staying on course. Like what Nirnal said, the next step is we have to call for a board meeting and get it formally approved, and then we will go back to the SEBI.
Right. Okay. And so you just, I'm sorry if I misheard. Are there regulatory issues with the SOA as well, or
no, there are no. It's a procedural matter. It's procedural.
Right. Okay. Okay. That's
all done. It's all done, Siddharth. It's done. We are just now working with the what is that? I forgot the name. What do you call that for ICSA Securities? The other one we are working, right, Harish?
That is Universal Trustee, sir.
Yeah. We are working with them now to try and see how to, take it.
Okay. And okay, so that's largely what it is from my end. Mr. Sudhir, do you have any questions to chime in with?
I think, Siddharth, you have covered most of few of my questions already, and Nidhar also covered.
Right.
I think for me, the most important thing is what is the sort of growth, because now it becomes a pure services firm. So we start tracking you on a QOQ basis.
Yeah.
Where does that QOQ number go? And of course, we're quite optimistic that, the new team and whatever you're trying to do would be very successful. So wish you all the best for that.
Thank you.
Thank you so much.
Right, thank you guys, and let's schedule this for next quarter as well. I mean, this is something really interesting. We genuinely enjoyed talking to you and getting your feedback on how the firm's looking from the inside. So yeah, let's do this soon, sometime in the next quarter.
Hi, Siddharth. This is Sudhir.